Hello and welcome to the Today's Money Masters. I'm your host, Jean-Paul Manu. The Today's Money Masters competition comprises 3 professional investors and a novice, each provided with $500,000 to invest. The participants will invest in stocks, bonds, and collective investment schemes, and they will share their strategies over the 1-year period. At the end of that period, the top portfolio manager will be declared. So let's continue with the masters on this very exciting journey. Now, a word from our sponsors.
Have you ever been interested in an IPO but didn't have the time to go in branch and submit all the documents? We've got a solution for that. With NCB Capital Markets Go IPO portal, you can submit and track your IPO application from any of your favorite devices. No need to go in branch. No need to contact a wealth advisor. No extra fees. And it's accessible to both NCB and non-NCB clients for all our offers. So no excuses. Investing is easier with Go IPO. Visit www.goipo.jncb.com or text GoIPO to 876-383-1729 and start investing today.
On the program today, we are joined by Chrevaugn Legister, our professional from Proven Wealth Limited. Chrevaugn, how are you doing?
I'm good. Thanks for having me, Jean-Paul.
Good. Nice to have you. Long time.
Yeah, that's true. It's good to be back.
Good. Chrevaugn, Jamaica Teas has been trading in the price range of $6 to $6.30 over the past few weeks, even after the listing of its subsidiary QWI Investments. Now, what do you think is preventing Jamaica Teas from breaking out of that current $6 to $6.30 trading range?
Okay. Yeah, John Paul. So, JamTeas, we saw some uptick in the price slightly before QWI Investments QE had listed.
Okay.
And that was driven by the fact that there was a discount for shareholders of JamTeas who were interested in going into QWI.
Okay.
So now the stock has fallen back within that range, I agree. And what I believe may happen is that investors are probably waiting to see what QWI's performance will do for JamTeas results. The fact is that JamTeas owns about 75% in total of QWI. So they get a share of the profits up from QWI. So their results should be, JamTeas results should be coming out, I think, in another couple of weeks. And investors may be just waiting to see if the QE, if QE is a good company and if they'll provide some additional earnings for JamTeas.
Can you speak a little bit to what QE is?
So QWI, or QE, is a fund management company that manages funds on behalf of its shareholders. It actually invests in local stocks, trading in local stocks, and that's how they earn most of their earnings.
Okay.
So the JamTeas, with its 75% shareholding in QE, will get a portion of their earnings. Okay. So what I'm saying is that that additional earnings from the QE is expected to contribute to JamTeas' bottom line. And I'm saying that investors may be waiting to see if QE will benefit JamTeas.
Right, so it's early days now. That was just introduced fairly recently.
Yeah. Yeah, so I mean, if this materializes, then you may see JamTeas breaking that 630 barrier and increasing to, I don't necessarily have a target price for it, but it could go above $6.30.
Okay, and that's hopeful because that's one of your big stocks, right?
So it doesn't necessarily represent a large portion of my portfolio. I'll admit that JamTeas, I had a hunch about JamTeas because I read in as I said, research is what most of my investments are made from. So I read in the paper of their holdings in QE and the potential listing of QE. So initially I bought JamTeas to benefit from that QE investment.
Okay.
Yeah.
All right, good. So we'll keep an eye on that one then.
Yes.
We'll see how that plays out. Your portfolio, Chrevaugn, has remained unchanged. Would you agree? Over the period so far. So do you personally prefer the buy and hold strategy or trading aggressively, and why?
So that's a good question. So from one of our initial episodes, I had mentioned that I am not necessarily an aggressive investor, right? So my strategy personally is to buy and hold. This competition only runs for 52 weeks. And I did disclose that I may have to take a more aggressive approach to investing. Right? 52 weeks is a short period of time if you're investing in stocks.
Sure.
But what I have realized, and what I'll educate persons about, is the fact that too much aggressive trading on your portfolio or off your portfolio can really cause your portfolio to churn too much.
Okay.
And what I mean by this is that you are likely to incur trading fees, brokerage fees.
Okay.
And if this trading activity is not meeting your investment objective, you're not profiting from it, then you are not you're not realizing any gains from the stocks that you have bought, and what you're incurring is a lot of trading fees, brokerage
and
fees.
Such. Right.
Yeah.
Which all add up.
So, initially my portfolio had JSC, that's Jamaica Stock Exchange. There are other stocks that I had in my portfolio, which I continuously traded. It affected my portfolio, I say significantly. And as such now, I have confidence in the stocks that I currently hold, albeit the prices have come off a bit, but that's generally across most stocks on the market right now.
Sure, right now.
Yeah.
Right.
So, to answer your question, my strategy is buy and hold. And as I'm saying, I have confidence in the stocks that I hold now. And I'm just waiting to see if there are other opportunities that may present itself.
Okay.
Right? Yeah.
Okay. So, follow your gut. You're a buy and hold kind of guy. No need to switch gears completely and become aggressive if that's not what you're
I agree.
thinking.
This portfolio cannot be that much of an actively managed portfolio.
Okay.
We were given $500,000. That's not a windfall of cash. It's really not a lot of money. So you have to choose wisely when you're making your investments. And I admit that in the initial stages, I may have been too aggressive with the buying and selling. You wouldn't want to buy a stock today and in 3 weeks' time, you're selling that stock.
Right.
Because I encourage, and what we do at Proven is to encourage investors to view stocks as long-term investments.
Right. I think you've said that before. Good. We'll have more with Chrevaugn Legister after this break.
Have you ever been interested in an IPO but didn't have the time to go in branch and submit all the documents? We've got a solution for that. With NCB Capital Markets Go IPO portal, you can submit and track your IPO application from any of your favorite devices. No need to go in branch. No need to contact a wealth advisor. No extra fees. And it's accessible to both NCB and non-NCB clients for all our offers. So no excuses. Investing is easier with Go IPO. Visit www.goipo.jncb.com or text GoIPO to 876-383-1729 and start investing today.
The Money Masters Funds. It's all about real growth, safety and security of your assets. The Growth Fund gives higher returns for the investor more focused on growth. Money Masters Funds, providing growth and security, performance and financial peace of mind.
We are CUFMC, Credit Union Fund Management Company. Trust matters, and you can believe in our reliability.
Service.
We give impeccable attention to your needs.
Experience.
Careful and prudent are part of our DNA.
Know-how.
After 70 years working exclusively for credit unions, now we're open to all investors. CUFMC, Credit Union Fund Management Company.
How we choose to invest our time today often has a propelling effect for what we gain tomorrow. It's like investing in shares.
Mommy, is this a share?
Yes. She's right. It's similar to how shares work. Companies are publicly listed on the Jamaica stock market. These companies are divided into pieces, and these pieces are what are called shares. The owners of these shares are called shareholders.
Welcome back to the Today's Money Masters competition. We are speaking with Chrevaugn Legister this week from Proven Wealth Limited. Chrevaugn, the NCB share price has been declining for weeks now. Do you see any recovery for it in sight? And do you have any thoughts as to what might be contributing to the depression of this stock? I think we spoke about it a few weeks ago, but what's anything else?
Yeah.
What are your thoughts?
Okay, so NCB. So before, I may have mentioned what I think have contributed to the decline in the stock price, mainly being the changes in management, top management, and also the upgrading of the NCB platform that hasn't necessarily gone as smoothly as projected.
Right.
So no, I'll admit I don't have all the answers.
Sure.
So since we have spoken, I've seen the stock price even fallen from $208 to as low as a little over $200. It beats me. I honestly don't have the answer. But what I can say is that in terms of there's any recovery, what you will realize is that around this time, there's usually a gradual uptick in NCB share price. And I say around this time because this is around when the company usually releases its end of year financial performance.
Sure.
So I am expecting that you may see more investor interest in the stock in the next 2 to 3 weeks going forward because we're expecting NCB to release its end of year financial performance.
And the end of year financials are generally positive, and that will bring people on board.
Most definitely. Within the last couple of years, NCB has been known for making record profits upon record profits upon record profits, right? And I would have expressed that this is a $20 billion profit-making company, and I don't expect to see anything less than 20 billion right now, right? And also, for what NCB has meant for my portfolio, I'll be honest, I have reduced my exposure to the stock, and it's not because it's a bad stock. What I will say is that NCB, for this competition, may not necessarily be a competition stock. What do I mean by that? So I bought NCB within the price range of about $215 per share, right? Just to give you a scenario. If a stock moves from $5 to $10, right, that is a 100% return that you'd have gotten, right? Because that's a
doubling.
Now, if another stock moves from $10 to $15, that's really just a 50% return that you have gotten. Right? So what am I trying to say is that at $200 and odd per share for NCB, that's quite expensive. So the change that you will see in terms of if the price moves, it won't necessarily be a significant return. So I've reduced my exposure to NCB, and I'm now looking for what I will call cheaper stocks where I can get a bigger bang for the buck. Right? So NCB is a good stock, but I believe it's one for the long-term hold and not necessarily one that will give me the greatest return within a 52-week range. Or what do we have? We have about 8 months left in the competition. Yeah. So, I mean, that has been my strategy now.
So it's nothing to worry about.
But it's nothing to worry about. I encourage investors to be gung-ho on NCB. Yes.
All right, good. Well, as usual, very interesting stuff. That was Chrevaugn Legister speaking with us this week, giving us his financial thoughts. Thank you, Chrevaugn.
You're welcome.
Join us next week, same time, for another exciting episode of the Masters Competition as we meet another participant. Follow the pros and the one novice each week on the Masters Competition. Listen and analyze the strategies with the Masters on RJR 94 FM Thursdays at 8:45 a.m. as they challenge each other to stay ahead. Also, look out for their portfolios in the Sunday Gleaner. The Masters Competition is a product of Today's Money Limited, brought to you in partnership with NCB Capital Markets Limited, Money Masters Limited, Credit Union Fund Management Company Limited, and the Jamaica Stock Exchange. I'm Jean-Paul Manu. The Masters is another fine product from Today's Money Limited.